All right, time now to take a look at the day's business news. Stephen Curl joins us in the set. Good morning to you, Stephen.
Hi, Will.
Seems like relations are warming up between China and the U.S.
That's right. Presidents Trump and Xi Jinping spoke on Thursday. It seems that conversation went well. Bloomberg reporting that President Trump has asked his cabinet to begin drafting an agreement that could end the escalating trade war between the world's two largest economies. Now, the leaders spoke by phone in the first publicly disclosed call in 6 months. Mr. Trump tweeting afterwards that it was a very good conversation that focused on trade, discussions, he said, moving along nicely ahead of meetings at the G20 in Argentina. China's foreign ministry also described the call as extremely positive. Now, talks between the US and China have made little progress since May of this year, the White House threatening to impose tariffs on all remaining imports from China after hitting $250 billion worth of goods with levies earlier this year. The big sticking points that remain include demands from the Trump administration for China to end subsidies for certain industries and to stop forcing foreign firms to hand over technology when they're doing business in China. Well, those reports of a deal being prepared to end the trade war certainly being well received in the markets. The general positive sentiment resonating for investors. We had huge gains across the Asian shares. You can see the Hang Seng in Hong Kong up 3.8% there. The Shanghai Composite. Hong Kong shares actually heading for their best week in quite a long time after the gains that we've seen this week. So lots of optimism there in Asia. And remember, now the trade tensions have been a concern for investors all around the world. So when we look at what's happening in Europe today, things opening up today as well. They're riding on that wave of optimism, gains across London, Paris and Frankfurt. We'll be keeping an eye on bank shares today. The European Banking Authority releases stress tests at the close of business. Today, there could be some very interesting reading in that, particularly on Italian banks. They're trading up for the moment. On the currency markets, the euro trading for $1.14 and just under 88 pence sterling, as you can see there. Well, meanwhile, the US Justice Department has indicted 2 companies based in China and Taiwan, accusing them of stealing trade secrets from the American chipmaker Micron. The companies named are United Microelectronics Corporation and Fujian Jinhua. 3 individuals have also been charged. US Attorney General Jeff Sessions says it's part of a broader crackdown against alleged economic espionage.
But since the beginning of 2017, we've charged 3 people with spying for China or attempting or conspiring to do so. And when it comes to trade secret theft, we are currently prosecuting 5 other cases where the theft or attempted theft was for the benefit of the Chinese government. In 2015, China committed publicly that it would not target American companies for economic gain. Obviously, that commitment has not been met.
Turning next to Apple, which briefly lost its crown of $1 trillion company after its results disappointed investors. Now, despite reporting better than expected earnings, the company warned that its performance for the crucial Christmas period may not be as good as it had previously hoped. Apple also announcing that it would stop reporting sales figures for individual products like the iPhone, as they feel it's not representative of the company's performance. Now, the figures might help to explain that. For the last 3 months of the financial year, Apple saw big rises in profits and revenues. The number of iPhones they sold, though, were flat compared to the same period last year, just up 0.4%, just under 47 million iPhones sold. Essentially, the rising revenues is because of the price of the iPhone, which is going up. Apple essentially needs to sell fewer of them to make more money. Investors not impressed with all of that, though. Shares in Apple down 6.5% in after-hours trading. One of the things Apple said in their results is that they would stop releasing those individual sales figures for products like the iPhone. So that's worrying some investors as well. The share price finishing at $207.80, $207.05 about is the mark for $1 trillion company. Dipped below that for just a short while in that after-hours trading period, but managed to bounce back before the close. Next, Starbucks shares got a caffeine hit on Thursday after their latest results impressed investors. It reported a 4% increase in same-store sales in the home market of the United States. That's as the coffee chain has been struggling to attract more customers. The rise this time around, though, actually down to customers spending more, as the number of transactions fell by 1%. Investors didn't mind though. Starbucks shares up 9% after hours. Well, finally, for me, one of the biggest names in Silicon Valley says the tech industry may have run out of ideas. Peter Thiel founded PayPal, I should say, in 1999. He later became an investor in Facebook, which is where he made a lot of his money. He was speaking at a conference organised by the New York Times. He says that Silicon Valley has jumped the shark and that industry giants now aren't nimble enough to innovate properly. He did admit, though, that perhaps all of the big ideas have already been tried. That's it. We can all go home now.
Sounds like famous last words, doesn't it?
Yeah.
All right. Thank you, Stephen. Stephen Carroll with a look at the business news. He'll be back a little bit later in the day.